Okay, let's answer some questions from the last market outlook. Fancy thumbnails confused me on the brand. Well, those will be the thumbnails going forward. I think it highlights on the very first screen two or three of the main topics I'll be talking about. Just completed the communications sector studies video and thought it was one of the best ones yet. Oh well, thank you. I really like how you went through the three different companies. The repetition and highlighting differences really helped to consolidate the knowledge. Yeah, for telecoms, there really only are three. It's nice and easy. For the automotive industry one that I'm doing, I'll be doing Ford, GM, and Tesla, because I think three of them are distinctly different enough to give a nice view of what they're doing. I wonder what's the next one that I'm doing. I have my list here. Let me see if I can. I'm torn between automobiles and consumer discretionary. In industrials, transportation infrastructure, there's marine ports. I don't know if there's a S&P 500 component for marine ports. I would have to look it up, but that sounds really interesting. And then in chemicals, in the chemical sector, or the sub-industry, sorry, the industry group, fertilizer and agricultural chemicals. I think fertilizer is sort of a timely one to do, so I'm torn between those three. I'll flip a three-sided coin and figure it out. Where are we? Just a little miscalculation. Extra 9% tax rate increases results in 90,000 extra tax on a million. Not 9. Did I say 9? 90. Okay, now I feel bad for everyone that's left. If I were still there, I would be really upset. Yeah, that starts to get excessive when you're already giving out so much, right? There are generally two types of tax regimes, and it depends on what it is they're trying to get done. When I say two types of tax regimes, you can have a tax regime that has high income tax and a low capital gains tax, right? Some other regions flip it around. They have a high capital gains tax and a low income tax. It depends on what they want to promote. When you have something like this, you want to promote investment because that's what leads to growth. If you have it in reverse, you want to promote longevity. In other words, you're not too interested in a lot of investment in businesses that grow and be sold. You want long, stable businesses, more stability for the economy. Canada has decided to go high on both. So, you know, it doesn't make a lot of sense because it looks like you don't have a plan. It's like, well, what are you hoping to accomplish with this? You know, a low level of investment. You have the high income tax, so you should have a low tax somewhere else to encourage something. But it seems like you just want a high tax everywhere. I don't know what your plan is, but then again, we're dealing with a drama teacher and a previous average journalist. Let's not expect a lot out of them, right? Let's see. Would you be able to add a video to the applied options course on how to risk manage a position with less than 100 shares? Seems unwise to sell an upside call to manage risk. It would be unwise. Wouldn't we begin to lose once the delta on the call exceeds the number of positions? Well, yes, it would. Note that this is based on momentum portfolio we created in the portfolio construction series. We sold a call to manage exit risk management after 10% decrease in our position. When I was doing that, what I was saying at the time is typically you'd try to sell 100 shares because risk management is much easier with 100 shares. And if you don't have the capacity to buy 100 shares, when I first started off, basically with momentum trading, I had a general rule simply because I was capital constrained. You know, you don't have hundreds of thousands of dollars. So when I was looking, and I would just use the 52-week high list to find my ideas. Greater than $5 but less than 30 is where I started. Of greater than 5 but less than 30. So if there was a stock hitting a 52-week high at $76, I would say, well, that would take up way too much of my capital and I'd be way too concentrated. So I really played in between here, knowing that there were opportunities on the outside of that that just were not my opportunities. I didn't have the capital for those opportunities. So you have to have some rules in which you operate in so that you can purchase 100 shares. Walkthrough video of how you sold your company to Serify. I have a non-disclosure, right? So because it's private equity, they don't like to talk. They don't like anybody talking about that, because all the private equity companies at some point need to be sold. So non-disclosure is quite serious. Excuse me. Might be a good opportunity to learn the steps for private equity deal. Yeah, I imagine at some point in the future I can be able to talk about broad brush strokes on this one, but certainly not any detail. I don't know how long the non-disclosure is. There was no time limit on it, so it might just be in perpetuity. That I was sold is public knowledge because they put out a press release, but they don't disclose details, and neither can I. On the assumption you're able to do a video, would like to know how the negotiation process went in order to reach common ground on the valuation. Yeah, that again, I can't say anything, right? NDA. Would be appreciated if you may kindly talk about comment on semiconductors. Well, I did a whole video for this for the applied level where I broke down the semiconductor industry, which then gives you, enough knowledge to begin to, choose a company, figure out where in the value chain that company belongs and what matters to it. Semis are, it's a small word, but it's such a big industry, and there's, when you say semiconductor, you gotta pick one. Like, are you talking about GPUs, CPUs? Are you talking about digital, analog? You gotta pick one, and focus on that. It's too big just to comment on. You really have to, and even within semis, I've just mentioned the chips. Are we talking about the equipment suppliers like ASML and Lam Research? Are we talking about the foundries like Taiwan Semiconductor? It's too big of a topic. It has to be narrowed down. Do you have any plans to dive deeper into option Greeks and specific options Greek strategies for the applied series? There really aren't that many that matter. Delta is a big one for the retail investor. Delta's the big one. Theta is a nice one. Theta is your income. Delta is your capital gain. You have Vega, which is just the rate of change of delta. Vega is very tied to the expiration date, especially if you're at a strike price, and Vega is very tied to the level of momentum. The others aren't that important. Like, the change in interest rates, they happen so infrequently, or they generally happen so infrequently that it's not the basis of a trading strategy. So I don't know beyond time decay and delta if the others really matter that much. Implied volatility, I've already talked about that one. There's a whole folder in there on volatility strategies. The other two, gamma is just the rate of change of delta, and rho is just the rate of change for a change in rates. Rho is rather uninteresting. So I think I have done that. Be interested to see your perspective on the royalty companies such as Royal Gold, Franco, Nevada. Great business, another way to gain exposure to metals. Yeah. Thanks for explaining capital movement and labor-oriented tax system. I have a derivatives class beginning next fall based on John Hall book. I began watching the series on options, futures, and other derivatives you posted here, but I also subscribe to the applied option series. Where shall I begin? Well, you may as well begin with the John Hall book. Options are 2 chapters in the John Hall book, like really talking about options, but there's really no anything applied. It's all just the model itself and understanding the model in the John Hall book. It's very academic. It's not very practical. So if you have a course based on that book, start with those videos. Reviewing Canada's 2024 budget recently, table A16, page 366 versus A17. On table A16, if I sum the entire row of pollution pricing proceeds to be returned to Canadians, I get 102.3 billion. If I sum pollution proceeds to be returned to Canadians, I get 104.2 billion. As revenue, expense the Canadian government is using other sources of income to pay for carbon. Would you agree this is effectively a direct wealth redistribution? Do you have a comment regarding the above versus the rhetoric that gets portrayed in the media surrounding the carbon tax, which is not a tax apparently? So what it's meant to do is change behavior, right? So let's say that I'm the one making the decision and you're not. But you know that when I make my decision, it's going to change the cost to you. But I won't change my decision unless the cost to me changes. So you institute a carbon tax for me such that I am now motivated to change my behavior from what I'm currently doing to something else. But you know that if you hit me with a carbon tax, I'm only going to pass it on to you, and you're going to pay more. The consumer pays for everything. If you tax a business, the business's customers pay for it. A business never gets taxed. A business never gets charged. Everything flows through to you. A business manages its margins. It tries to keep its margins constant, which means you absorb everything. Except for cost savings, the business will take the opportunity to expand its margins there. So the government taxes me to change my behavior and gives you a rebate because they know that you're the ultimate payer and I'm the one that's going to try to change my behavior, or at least the thinking is that I will attempt to change my behavior. So in essence, it is a tax because for me to change my behavior, I might engage in something that would otherwise be more expensive for you in the long run. Which means when this rebate ends, you will be left with a higher price level on everything anyways. Right? I mean, it can't continue on forever because once I change my behavior, well, then I'm not paying any carbon tax. Do you get that? If I'm not paying any carbon tax, if I'm using a traditional form of energy and I switch to a different form of energy, but it does raise my costs and I pass it along because I'm not paying into the carbon system, you're not getting that as a rebate out of the carbon system. So everyone can change their behavior such that there is no carbon tax revenue, there'd be no carbon tax rebate, but the consumer would be left paying for the higher cost of everything. It's not well thought out, and it doesn't really change the behavior in a way that you'd like to see behavior changed. Because I am not going to invest a lot in different capital. I'm simply going to buy carbon credits from someone else, and I'm simply going to pass that on to you, and you're going to get the rebate, and everyone's going to be happy. We're all pretending, right? So I think if you wanted to change behavior, you would incentivize the company. You wouldn't disincentivize an activity, you would incentivize another activity. And carbon tax really only works if every economy if every economy is going to institute the carbon tax. Is March .7 retail sales adjusted for inflation? You can't adjust retail sales for inflation. It would be too difficult because it's retail sales. The whole service component is ignored. A whole bunch of categories in CPI are ignored, so you can't adjust for that. But if you look at the goods component of CPI, it's in deflation. So if you're up 0.7 on a nominal number and CPI showed deflation, on a real basis, you're actually even higher. But you can't adjust it for CPI because retail sales will probably, depending on where the prices are, will not conform to the CPI basket. So PCE is the better way to account for price changes on retail sales. And PCE, only the goods side of PCE. And even that's not a very perfect measure. It seems you think it is a good moment to go long-dated straddles in NVIDIA. Well, I seem to think NVIDIA is going somewhere. It's either a thing and it's going to go up significantly more than where it is now, or it's not a thing and it's just going to go back down to $400, $300. Either this is a long-term build-out or it was a short-term thing and it's pretty much near the end. I just don't think it's going to stay here. I just don't think that we get to a point that, no, this is it, and it can maintain this price without either moving much higher or much lower. I don't know if it's a good time to go long-dated straddles. Depends on what you pay for them. Can you elaborate on why you think the economic environment will not favor home builders? Well, mortgage rates. I mean, that's an easy one right there. Mortgage rates. You can only record revenue when you sell a house, and if mortgage rates stay this high, then you have lower demand for new houses. There it is. I don't know that the home builders are ready to take another leg up. Look, the housing shortage still exists. That's a given. Pulte said so much on their earnings recently. Well, just I think yesterday. Pulte said so much on their earnings. So it's true. It does exist. There is a housing shortage. But there's also a demand shortage, simply because mortgage rates are so high that I don't know that the home builders are going to take another leg up until interest rates actually start dropping. Given the massive net long positions existing in the FX market and the explicit intervention warning from BOJ, what could be the cause of the relentless slide of the yen? Well, when you say, given the massive net long position existing in that currency, if you're net long, you're long the U.S., you're short the yen. It's not, and it's not as if it makes the case that the yen should be stronger. I think the market just doesn't believe that the Bank of Japan could do much more than short-term movements on the yen. Intervention is not a long-term solution. I think the market just sort of says, well, we can live through 500-600 basis point move. It's only going to be reversed later on. I don't think the market thinks Japan is in any position to raise interest rates. We have a Bank of Japan meeting, I think, this week sometime. And expect nothing. They can't raise rates, not with the level of debt they have. They can't afford it. The government simply can't afford it. You would cause a crisis in the country if you raised rates. They've allowed the government to get to such a point on the debt that they simply can't let it happen. And I think the market is way ahead of Japan on this one, saying you can't let it happen. You can't raise rates. You're not going to raise rates. Your intervention is only short term. It won't work for the long term. And I think long term they're looking at 250 from 155 now, thinking, well, 250 is probably a possibility. And as far as a funding currency on a carry trade, why wouldn't we be long the U.S., short the yen? I heard investors sometimes state that having negative working capital is a good thing. It's a great thing. It's not intuitive to me. Having negative working capital means you're collecting all your money before you're paying anything out. So Dell was a good example of this in the 90s. When you bought a Dell computer, you paid for it today. Then they ordered the parts. And then they'd pay their suppliers in 30 days. So they got their money up front before they took on any inventory. So their cash conversion cycle was negative, right? Having negative working capital is great because you're getting your money way before you're paying anybody. That's great. You don't need to finance that through any short-term financing, through any line of credit. Working capital costs money because you have capital tied up. What would be the underlying reason for ABR to do better than, say, agency in this latest market downturn? Well, agency is going to be a function of the interest rate, and interest rates on the long end of the curve have been going up, period. It's a financial asset. It's going to have an inverse relationship with interest rates. Prices are going down, period. Now, prices are going down. That doesn't mean its cash flow is going to be affected. Its prices are going down. That's it. But ABR, you can say, well, it's the same thing, financial assets. True, but there are strategic players. That there are people who can behave strategically. A mortgage-backed security cannot behave strategically. It will just reprice. But the borrowers of the mezzanine loans with ABR can behave strategically. Let's say I have 44 shares of FCX and I'd like to sell a 52 call. I think you already asked a question above about this. Not about this specific thing, but more general. Manage an exit price, 52.50. They're called away from me, I'd be left with a 64 short position in FCX. I don't know that that would be so bad given the earnings and the outlook that they gave, given the assumptions that they made to get there. That any deviation from those assumptions, and they were aggressive assumptions, is not going to be met well. I don't know that I was a big fan of their forecast. Should I not have sold the call in the first instance? I wouldn't sell a call. If you do, I mean, it's easier just to lighten up a few shares than sell a call. What's the history of your consistently negative outlook on Tesla? The history of my consistently negative outlook, I'm not negative on Tesla. I'm negative on their valuation. If Tesla were $10, I'd probably be the biggest bull on the street buying it and wondering, why is it at $10? What the hell is going on? Don't people understand? But at the valuation that they're at, it is, in the end, a car company. It cannot escape the gravity of its industry. It will have industry margins, and it will have competition, period. Lots of it, especially at the low end. It's going to have lots of competition. The idea that they can announce, okay, we'll actually do a $25,000 car, and that people think, investors think this is fantastic. There's no margin in a $25,000 car. Like there's no margin in it at all. So I don't know why everyone's super excited about this. It also cannibalizes your higher end product. So I'm not convinced that this is a solution to anything. So they're gonna do what? Rush another car to market? Another Cybertruck? I don't know. I kind of think their best days are behind them. I think they're being distracted with a CEO who's not on the job. I think they're being distracted with way too many projects going on inside. You know, they're a robo-taxi company. No, they're not. They're a robot company. No, they're not. They're an energy company. No, they're not. They're a car company. No, they're not. I mean, what are they? Right? In the end, they're a car company trying as hard as they possibly can to not be a car company. And I think that's why he canceled, or why the rumor was they canceled the $25,000 car and decided to focus on robo-taxis, because they really don't want to be a car company. And if you introduce a $25,000 car, you're a car company. You're going to be a car company, period. And I don't think they wanted to do that. So, on the conference call, he said, if you don't believe in the autonomous future of Tesla, don't buy the stock. So he's still trying very, very hard not to be a car company, but he's a car company. It's the valuation and the unwillingness to embrace the industry and to start acting like they're in the auto industry. Now, the other thing that's going to hit them is the union. Now, when the union hits them, and it will, they just laid off how many people in Austin? Over 2,000 people in Austin. That would have been much more challenging with the union. Not that they couldn't have done it. You could lay off whoever you want, but that would be much more challenging with the union. How do you think everyone else feels with a CEO who makes decisions, sometimes in the middle of the night, and then that's it? Ad hoc decisions. The idea that they're not going to get a union is foolhardy. You get a union, you can start to say goodbye to all of these silly little things you're trying to get done. Not goodbye to them, but at least significant roadblocks. Unions demand investment in certain products, demand investment in certain plants. That's all capital intensive. That all takes capital. And they had what, negative cash flow? Negative cash flow this quarter, 2 billion dollars. Now they still got $26 billion left, but how many quarters can you go with a negative $2 billion cash flow? An announcement that they're going to introduce something doesn't change their fortunes. If anything, it's going to make sales a lot harder at this point, because why would I buy a discounted vehicle if you're telling me that if I wait a year I can get one for $25,000? So this is just going to hurt their cash flow even more. I'm negative on it because you have a company that has grown up in the auto industry that refuses to accept the economics of the industry and begin to work within those economics. And it's you can't knock the ability of Elon Musk to get the stock price up by just announcing things. They just have to make an announcement, and up they go. GM said they are restarting Cruise in Tuesday earnings. Does this change your view on them? You mentioned shutting down Cruise unit was the right move. Yeah, I think shutting it down was the right move. I think this idea that by 2030 they'll be generating $50 billion a year in robotaxi revenue is a pipe dream. I think it's ridiculous, and the market is not believing it. The market believes it from Tesla, but it doesn't believe it from GM. The power of Cruise is this. They need to log miles. They need to get miles in fenced-in areas, right? They need to slowly, incrementally improve that software because it goes into vehicles. They're doing quite well with Cruise on the vehicle, that they can sell subscriptions to it. They can become something they can add to the vehicle. But you need a testing ground. Well, that's Cruise. But to suddenly have these dreams that it's going to be this whole division generating $50 billion in revenue and piling $1 billion a year or $2 billion a year into it is like, come on now, come on. You don't need that. So yes, keep Cruise going. and expand cruise as much as you can within limits of reasonable capex. Forget about a revenue stream out of cruise. If you do get any revenue stream, it covers your costs, but it's not a business model. Autonomous robo-taxis, those are years away. Years away. Right? You think there isn't an army of class action law firms out there perched on the end of their chair waiting for someone to get killed in one of these things? Waiting? That's happening. You got to get past that. Reason for performing stock splits to reduce the share price when it's deemed to be too high for the general public. Okay. Are there other motivations for a company to conduct stock splits? Usually it's price. There's rarely any other reason. Usually it's price. And if you can get the price into a better place, you can increase the liquidity in the shares. But usually it's price. I don't get any bond execution for anything more than 2 years for 3,000 to 4,000 bond. Yeah, that's too low. 3,000 to 4,000. That's too low. That's probably why you're not getting picked up. It's too low. Do you think the Fed will raise rates in June to scare off Congress from doing any? No, the Fed doesn't care about Congress. The Fed's not going to do anything Congress. And to be honest with you, Congress is not going to be scared off from spending. Congress is going to spend. And the next administration, the Trump administration, will lower taxes. Lower. Deficits are not going away. Debt is not going away. At some point, they will be Japan, but you have a central bank that will step in and buy the debt. They will move to the zero line and buy the debt. It is inevitable. They won't let the economy go down in flames because it's one of their mandates. Congress will run it into the ground, and the Fed will do everything it possibly can to slow it down. This is where we are. So, because we have absolute jokers running the government now, absolute jokers. There's no quality there. They're absolute lunatics and jokers, and we elect them. Debt is going to happen. It's going to happen, and more of it is going to happen, period. The question is, what is the Fed going to do in response? Because one of its mandates is economic growth. The higher the interest rate gets on government debt, the higher interest rates go on everything else because it is considered the risk-free rate, which means you kill the economy, you're going to have to run to the zero line. You're going to have to. It's inevitable. It is probably as high a conviction trade as I have is just sit back. One thing I know is no matter who's in government, there will be deficits and increasing debt, and the market will get more and more concerned. There'll be another downgrade at some point, or a very significant warning from one of the credit agencies, a negative, maybe a negative outlook. Yeah, the central bank will have no choice. They want to get their balance sheet down. Wow. Good luck. You want to be in ample reserves. Don't worry. You will be in ample reserves because you're going to have to buy the government debt. And you'll be in the same place as the Bank of Japan where you cannot raise rates. And you probably can't step in to protect your currency for very long either. And I don't think this is unique to the US. Developed countries have financed a lot of their growth over the years with debt. Debt is a central tool in economic growth if used wisely. It is a double-edged sword and a dangerous sword to be swinging around once the jokers get involved, and we have idiots and jokers out there. And we have idiots and jokers who also think that if you incurred some personal debt, it shouldn't be your fault anymore. That we should issue more government debt to pay for your personal debt. And here we are. Henry George mentioned the greatest threat facing the nation was the unequal distribution of wealth. What, in your opinion, can government do other than taxing successful people? Well, listen, it is a threat to the nation, period. unequal distribution of wealth is an absolute threat to the nation. But solving it means that you introduce a system whereby you have social mobility. You can't just rearrange the pieces on the board and think you have a fair game and think that everything is going to be okay, because if you don't change the nature of the system, it'll only be a matter of time before the money that you took away from people, they'll have back. And the money you gave to people, they'll give up. It's just a matter of time before you'll get back to the same distribution. Now, if you have a system that has capital mobility, you also have a leak at the top, because you'll get wealth inequality, and then that wealth will walk out the door. And then you can't redistribute that person's wealth. Canada can no longer redistribute my wealth. And I'm not alone. There are more people coming down here. Call any real estate agent in Costa Rica and find out how much their phones are ringing from states like California, New York, from countries like Canada, of people who are at the breaking point of the taxes. And when politicians want to raise taxes, they keep going after the same group of people. Just a little bit more, just a little bit more, just a little bit more. And they've been doing that for how long? Just a little bit more. Look, you keep asking for a little bit more, and you never seem to solve the problem. Me paying a little bit more isn't going to change anything. If you have a system where there is structural inability, a structural inability for those at the bottom to make their way to the top, then yes, wealth inequality is an absolute threat to that nation, because at some point the bottom's going to get angry and they'll feel that they have no choice but to take up arms. Right? Costa Rica is a good example of a country like that, where you have structural poverty because you have a massive concentration of wealth in a few groups of people in this country. Maybe 20 families in this country own a lot of the wealth, and you have massive corruption in government. So that is a threat to this system. But in Canada, in the US, you're going to get wealth inequality. That's not an interesting outcome. You're going to get wealth inequality. The question is that inequality fair? If I've sacrificed, if I went to school, I have 5 university degrees, I have 2 graduate degrees, and I gave up a significant part of my life to build a business. I employed people, I brought money into the country, and I gave the government a tax base. To say that I should have nothing more than the person who did nothing, that it should all be taken away from me and redistributed so that we're all equal, what do you think that I would do? I probably never would have started any of that. I probably would have said, what would be the point? What would be the point? If I can have just as good a life as you, financially, without doing anything, that leaves me free to explore philosophy and poetry and spend my days at the library and read books, because I can be no better off than you. That is a surefire way to destroy an entire economy. There is wealth inequality. That's not an interesting observation. It's not even an interesting question. The question is the inequality fair? In Costa Rica, no, it is not fair. In Canada, yes, it is fair. So you can have an unequal distribution of wealth, and it is not a threat to the nation if you have social mobility. And developed economies have social mobility. So politicians are trying to solve something that is inevitable, that is not a problem or a threat to the nation. If liberals really want to solve problems in the world, it's not in the US, it's not in Canada, it's in Latin America, it's in Africa, it's in the Middle East, where you have structural poverty. And if liberals really believed what they said, they would say that there is a moral obligation from their government to invade these countries and get rid of the corrupt government for the people. There would be a moral obligation for colonialism. I know those are harsh words, but if you're complaining about life in Canada and the US because you're poor, maybe look at yourself first, because there is no structural impediment from you going from the bottom to the top. I did, all the way from the bottom all the way to the top, and at one point all the way right back to the bottom and then back to the top again. But if I lived here in Costa Rica and I was born at the bottom is where I stay. The bottom is where I stay. That's a crime. Not in Canada. Poor people in crime? Poor people in Canada is not a crime. Poor people in Costa Rica, there's a crime. I can tell you that. What are your thoughts on the risk of the Fed hiking rates if inflation remains sticky at the current range? I don't think they will hike rates. I don't think they can. I think they are at the point where they're starting to recognize that they may be able to get by right now a little bit longer without hurting government finances. But the longer they stay here, the more Janet Yellen is on the phone to Jerome Powell saying, hey, getting a little uncomfortable over here. You know, maybe a couple more quarters, but it's going to start to get uncomfortable here. So I don't think they can raise rates. I think if they raised rates, you would have a massive market reaction. And I think that you would have a massive corporate reaction. I think you would have a lot of smaller companies throwing in the towel saying, well, that's it. I could have hung out here for a while, but if rates are going up, I'm already underwater. I'm crushed. I give up. And you would have, I think, spikes in unemployment if you did that, because if they raised rates, how much higher could they go from there? Then all of the forecasting of where they're going to go is going to start to come in. And if I think I can't afford 8% interest and you're telling me it's going to go to 11 before the end of the year, well, I may as well give up now. I mean, I haven't even got the money to get past this. I'm not about to make another capital call. I'm not about to sell my house. No, that's it. I give up. I'm going to stop here. It would cause a huge problem because of the perception that it would get worse. So no, I don't think that they can. I think they're between a rock and a hard place, and I think they're at the hard place. That means they got to move back to the rock. How do you think the cap gain taxes increase will affect Canadian residential REITs? Has your investment thesis changed regarding cap rate? No, it hasn't changed regarding cap rate. REITs, remember, pass everything along. They pass everything along to the trust holders. So as far as the management of the REIT is concerned, it's not going to change their behavior because they're not being taxed on it. It may change an investor behavior, but if you're holding REITs within your RSP or your TFSA, if you're in your TFSA, you don't really care. If it's in your RSP, it shouldn't bother you because every dollar you take out is going to be taxed at your marginal tax rate, no matter how you made it anyways. So most REITs are held within some kind of structure like that. End up doing with your AT&T put options, and if you took the assignment, I never got assigned. In March they finished over 17. I didn't sell April's because the 17s had no premium because AT&T was $17.50, $17.60 at that time. Then it came down. I've sold the 17s. I've got 100 16s and 50 17 puts for May. And as of this morning, AT&T was up nicely on earnings, over $17 because it had good earnings and then it sold off. Where is AT&T now? Let me look across here. 1677, 1678, got down to 1640, rebounding. I was going to buy, and I thought, well, let me sell some 17 puts. Never got them, and well, here we are now. So no, not assigned. Understand that for stocks you sell puts on, not every month will be a month to sell puts. I want to sell 17 puts, AT&T at $17.50. There's no money in the 17 puts. Not worth it. So you sell puts on other things. You got to have a good, I think, a dozen to a dozen and a half, 10, 15, 20 stocks on your watch list. And every month, 4 or 5 of them might be in a position to sell puts. You have to have a rule. I'm not going to sell puts on this stock until it gets to this price or lower. I'm not going to sell puts on this stock till it gets to this price or lower. And not every month will you be able to sell puts on your neutral holdings. So I didn't sell any. Do you think we'll continue to trade in a range? Yeah, I think so. Is it good for the options factory strategy? Yeah, I think so. TLT, if long-term rates continue to go higher, does it make sense to hold a higher percentage of your portfolio in duration? The more the market wants to talk about rates staying higher, staying at this level or going higher, the lower fixed income prices go, the higher yields go, the more I will take on duration. This is I'd say 12-month to 18-month play where the central bank will have no choice. It's not a matter of listening to them and saying, oh, but they're saying this. They will have no choice. I firmly believe that they will have no choice. I am trying to sell puts today. Let me slide over here. I have 87 put for May. Trying to get the 87 put for May, but I don't like the price yet. I want to wait to see if TLT goes lower. We have GDP coming up this week. If GDP is strong, it probably will drive bond yields higher, but I am looking to sell more puts on TLT. I believe you mentioned in the video that it may not be the best situation going forward for home build. Oh, wait, you did that. A tour guide in Norway told me people trust the system. Well, if it's a tour guide, I mean, a tour guide must be an expert in all things economics, right? A tour guide, they like paying into it. Tour guide told you that people like paying into it. Well, come on, let's keep going. That's a tour guide. How much weight do you put on the tour guide, right? I've heard you say this a number of times. You say, given the choice between high interest rates and high inflation, you seem to think that high inflation would be better because you can manage your way around that. Yep, but not with interest rates, correct? Interesting point about inflation versus interest rates. Turkey's experience with high inflation for several years will experience a challenge it can create. Well, there's a difference between inflation and hyperinflation. Hyperinflation is going to affect you. There's probably little you can do about that. Inflation, we don't have hyperinflation. We have inflation. We're with 3-point-something%, and we're what, holding rates at 5.5% and destroying other people's lives, and raising the cost of. And if you want to think about the bottom 50% can't handle inflation. The bottom 50% usually are the biggest clients of debt management services. They have debt. They live with debt. So you're just killing them in another way. I mean, you can kill them with prices when they go shopping, or you can kill them with interest rates. They can't avoid the interest rate, but at least they can shop around. At least they can use coupons. At least they can pick up the buy two, get one free deals, right? But not if you kill them on interest rates. But that's inflation. And again, let's put it in perspective. 3-point-something% inflation. I mean, put it in perspective. Hyperinflation is where prices are going up 40-50% a year. 3.2, 3.3%, 50%. Like, think of the big difference of that, right? When you have hyperinflation, then yeah, you have to do something to crush that quickly. It's very rare a developed economy will get hyperinflation because they don't need an external currency. A country that needs an external currency, yeah, there's a problem. What are your thoughts on agency earnings? Not bad, huh? It's a good straddle candidate to generate income, well supported at 950 level. Well, I don't know if they're supported at 950, but I'd say at the 9 level. I was looking at the $9 puts yesterday. I don't know what month. There was 51 cents in them. I thought, it seems pretty good, but I didn't make a move on it. Small company has a big breakthrough in AI. Wouldn't the Mag 6 or 7 companies be willing to just buy them out? Yeah, probably. So they can use that breakthrough for themselves. Yeah, if regulators allow it. Seems hard to imagine a lot of small players grow big and eat away the AI market share when they could just buy them and capture that growth. If they recognize it, right? I mean, if they recognize it, GM or Ford could have bought out Tesla 2010, 2011, 2012, publicly traded company. You can buy them out at any time. Didn't recognize it, didn't see it. Could have bought them out when they were nothing. So it's a matter of, sure, when something comes along, would they recognize it? XHEB falling hard in April. Do you think the story is over? Would you increase your position? Not until I saw rates cut. There'll still be plenty of opportunity by the home builders, but probably not until I actually see rate cuts. Can't find balance sheet video. Is there anywhere you did upload because I don't see it in financials? Never got to it yet because the level 3 content for 2025 came out and I got to run and do that stuff, right? But that is on the list still. Is there anything to note about the QRA quarterly refunding announcement coming May 1st? I think this one will be rather benign simply because you have your tax revenues that have come in. So I don't know. The last one, really wasn't that important either. Or I shouldn't say it wasn't important. The last one came in rather benign. I don't expect this one to really change much. No, I don't expect it to change much. Powell said when asked during one of the FOMC Q&As that he could see them tapering balance sheet runoff while keeping rates elevated. Yeah, they could. I think that's what they will do. Is they'll start. They see that as two separate things. They'll start the balance sheet runoff, and then they'll think about interest rates at some other point in time. But with May coming up, I think they'll probably announce the balance sheet runoff in May, and then in June, I'm still feeling the first rate cut in June. Fed is going to sell off, reduce the assets on its balance sheet likely in May. No, it's been doing this for quite some time now. It's going to slow down the selling off of the assets. Performing QT. No, not performing QT. Performing less QE. Slowing down the economy. No. Also, it's going to cut the FFR, federal, soon after that, which has the effect of stimulating the economy. Aren't these two countering each other? Well, the balance sheet runoff is just imagine that your pool is overflowing and you're draining your pool. Now you could say, you're draining your pool. The water level in your pool is going down, which is technically true. You're draining your pool, but you'd have to do a lot of draining just to stop it from overflowing. That's where the balance sheet is that they have way more reserves than what they need, so they can allow it to run off without really affecting very much, but they're just going to slow down the speed at which it runs off. That's all. I'd like to understand why you're more convinced than most pundits out there cutting rates this year. Is it because of the amount of growing interest expense? That's exactly it. It's at some point you cause more damage with the higher rates than the inflation rate would. If inflation had gone from 1.5% to 3.5%, the Fed might have raised rates 75 basis points. We might be at less than 1%. But inflation went all the way up to 9% and then started coming down, and now we're at 5.5, right? Because of the pathway, at this level of inflation, we're at 5.5. But if the pathway had been different, we would not be at 5.5. So for the same level of inflation, we have two different possible outcomes because it's dependent on the path. So if we want to talk about anchoring, the Fed is anchored to a higher level of inflation that we did see. Hence, the job is not done because we're not back at 2%. But had we increased from 1.5 to where we are now, the Fed would be anchored still at the 1.5. So there is some bias going on in their thinking. They're anchored to the 9.1, and there's the recency effect. We just saw high inflation. Oh my God, we don't want to see it again. I think slowly they're starting to understand that they're hurting more than they're helping, and that the categories that are causing the higher reads in inflation right now are categories that cannot be solved with a high interest rate. Probably more likely to be solved with a lower interest rate. Let's see. Also, applied level subscriber. Where can I find resources about understanding the mechanics between liquidity, Fed balance sheet, and ample reserves regime? Sector studies in the financial sector. Real yields up, break-even rate stands still, means long-term market rates are rising because of higher expected growth in the economy. Market forgot about recession, but it is not really concerned about inflation. Data shows different view than media. Well, that would, you're, I think, asking me to guess at what data is showing a different view than media. I don't know how to answer that, or if that's just a comment. Is it easy for Canadians to open an American bank account, especially if they are non-residents? An American bank account at an American bank, yeah. No. I mean, it's difficult. Answer my question already. I was just curious about residency status. I think I did answer that one. You need to be a resident, or if you're in Canada, use one of the Canadian banks and have a bank account set up at one of their U.S. branches. Still holding home builders? No, I gave up home builders a while back. Thoughts on Texas Instruments and Tesla pre-market price action after earnings? Texas Instrument, warranted. Tesla, unwarranted. Tesla had an objectively bad quarter, and while I agree with everything Elon said about full self-driving robotaxis utilizing Tesla vehicles idle, I don't see that at all. I think that's a dream. Tesla vehicles while idle. The whole insurance industry is going to have something very different to say about that. Compute like Amazon did starting AWS. AWS is not self-driving vehicles. That's a whole different thing. Timelines are either non-existent or highly unreasonable. Oh, okay, so you're sort of agreeing with me. I agree with everything Elon said about full self-driving, robo-taxis. Yeah. Okay, so I just want to be clear. We absolutely disagree on what you say. You agree with Elon. I disagree with that. His timelines are either non-existent or highly unreasonable. I agree with you there. Even though we disagree on what we're agreeing on the timeline on. Sure, we will have mainstream adoption of robotaxis. I disagree with you there. Full self-driving, disagree with you there. Non-smart car obsolescence, disagree with you there. But not in the next 2 or even 3 decades. Okay. If you're talking, I thought you meant years. I was going to say disagree with you. If you're talking decades, okay, maybe that's the right time frame. Okay, will we have a self-driving car at some point? I agree. Yeah, we probably will. We're probably headed towards there. Is it going to be this decade? No. If you're saying 2 to 3 decades, okay, we agree. I agree with you. 2 to 3 decades out, yes. When the grid becomes smart, and when the pedestrian becomes smart. In other words, everything is talking to everything else, and you have full 5G implementation from lamppost to lamppost to lamppost, yes. Then you'll have full self-driving in about 3 decades in developed countries. Probably never in developing countries. For a simple reason. Take the city I'm in, San Jose. Forget the idea that there'll ever be full self-driving on these roads, and forget that these roads can ever be improved, because there was no city planning in building this city, and now it's too late. Unless you completely level neighborhoods altogether, and I mean completely level them altogether, you're not going to change what's here. And to do that, you need money. Well, you have a corrupt system in which you're never going to get the tax revenue to get that done. So it's never going to happen. In a lot of countries in the world, it's never going to happen. Not even 3 decades from now. So it's just another reason why developing countries will probably continue to always just be developing countries, because they don't have the revenue or the ability in the infrastructure to get any of that done. Texas Instruments is all about guidance. Maybe I need to listen to the earnings call again. Previous year, I just started looking at their 10K, trying to understand the company. Yeah, I can't comment on it. Analog, they're big on analog chips, and if you have anything in the world that needs to communicate with the real world and then process what it sees, you need an analog chip. So anything that communicates with the world, or that senses the world, or that takes information in from the world, you need an analog chip. Well, we're only going to get more and more and more of those devices. So if I have a long run horizon, 15, 20 years, XLK should be a good investment. I believe so. It is a rebalancing portfolio, rebalancing and reconstituting all on its own. As a follow-up, would you recommend managing actively the position by selling covered calls? No, not really. Not over that long a period of time. No, I wouldn't do that. I'd be more likely to sell puts when I want to add to my position. If I know that I'm getting money in 3 months, if I'm adding money quarterly, then I'll sell puts quarterly, get that revenue, and if it is put to me, well, I would have bought anyways, right? Are you all out of your home builders? Yep. Will you re-enter at another point? Maybe. See how it plays out. Perhaps when interest rates begin to get cut. Yeah. Still believe there's an undersupply of houses. There is. And will likely remain with increased immigration. As your thesis changed? No, it hasn't. No, but I think right now the biggest return that I can get is in Canadian apartment REITs. The biggest return. I started a new job that requires 40 to 50 minute commute one way 3 times a week. So I'm now looking for some podcast recommendations. I'll let other people answer that one. Where do you think EQIX is going after the short report? No idea. I'm not even familiar with it. Is it still a good time to load up on 20-year bond to achieve 60-40 portfolio before cuts? Yeah, I think so. It's the most efficient way to amass knowledge given a limited time. Normally takes 3 to 4 hours processing a 2-hour video from your content. There is no shortcut. If you have a limited amount of time, then you can only amass a limited amount of knowledge. So focus on one thing. One company, one industry, one ETF. Just focus on one thing. There is no substitute when it comes to learning. There is no substitute. Time is what is required, period. It's time, and if you don't have the time, then there's no shortcut. If there was, it would have found its way into the education system a long time ago. There is no shortcut. You got to put in the time. Any concern with how the U.S. administration reports data such as unemployment or GDP? No. Looking at initial filings for unemployment insurance of April 13th, and for the past 5 of the 6 weeks, we are seeing 212 claims. How large the U.S. economy is, considering other variables such as seasonality. Well, they're all seasonally adjusted. Economic fluctuations, I don't know that we're getting too much of that. The fact that this measure doesn't seem to move by only 1,000 each, well, we can count. That's a number we can count. People who show up and file for unemployment, that's an objective number that we can count. We can count it. An interesting take I heard on this is that the initial claims is not really capturing the true amount of claims because there are individuals choosing not to ask for unemployment, but instead becoming Uber drivers or influencers or gig workers in some respect, so that they're using gig work as their unemployment insurance and not really going and saying, okay, I'm unemployed. So that there is significantly more than that number, but that because of the gig economy, it absorbs those people quite well. Are we becoming a new China in terms of accuracy? No, I don't think so. Most companies in my area prefer to recruit engineering majors to work in finance roles. As a finance major, this is very concerning to me. What is your outlook on the job market? Okay. I am very far removed from the job market. Very far removed. So when it comes to the job market, I don't have a clue at all. You often use Canada and the US as examples for obvious reasons, but seldom countries in Europe. It's because I know nothing about them. At the very high level, are you aware of how Western European countries are doing in contrast to top Canada? Nope. Nope. I understand it's a broad topic and even a broader question. If you have literature to share, I have nothing. Nope. Why are you saying that the conditions are not favorable going forward for home builders? Well, because you have high home prices and you have high financing costs. Those are not favorable conditions. Yes, you have a lack of supply, but you also have a lack of demand. The best conditions are a lack of supply and rising demand. We don't have rising demand. I think that the overall macro trend of significantly undersupply is still in play. Yes, it is. 30-day puts on SPY and Q between 5 and 10% below current price on a weekly basis generate extra income. Do you think the recent decline in the market is a good opportunity to implement this, or would you wait for a further decline? I wouldn't do it at all. I mean, I think there just are easier fights to win. The premium you're getting on SPY 30-day puts is what, like 1%? 1%. There's just better things to earn income on that are safer. GM, sell those $43 and $42 puts, you'll do better. Ford, I think, will follow suit with GM. Newmont Mining, Freeport. Well, Freeport may be a little bit lower than where it is right now. AT&T, another good example. I mean, there are easier fights to win. They give me more than 1%. I don't know that I would even touch those. I don't even know that I would touch beta because I don't want to own them at these levels. So I don't want to sell puts at these levels. You arrived at U.S. defense spending being the largest item on the federal budget. Significantly smaller in both Social Security and healthcare, accounting for just 12-15 in total spending in any given year. So there are discretionary and non-discretionary items. Social Security is an entitlement. You can't really do much about that. In contrast, general human resource category comprises of, well, yeah, the wages aspect is always going to be a big one. That's an operational thing. So the budget, the line item for defense is probably their largest discretionary line item. People often consider only the discretionary spending, where indeed it is the largest category, but overlook the much larger non-discretionary spending. So there, I don't know that it is worth looking at the non-discretionary. You have an entitlement that has to be paid for. It is, in other words, since there was no decision made on it, it is the expense that it is, right? But I get your point. A few weeks back, I believe you mentioned you like the idea of selling TLT 94 puts. Yeah. Question is, if one of these particular puts into the market, wouldn't they be put to you automatically? No. As the price was already a few dollars below the strike you're selling? No. Because there's a time value component. There's the intrinsic value and there's a time value. If I was long the put, I could always do better by selling my put than I could by putting my shares to you. I could always do better. Would society have any mechanisms to redistribute wealth? Capitalism. Should we rely on ethical, wealthy people to do it themselves? No. Capitalism. What's the best wealth distribution mechanism? Bring me something of value. Present to me something of value. I have money. You want my money. Be of value to me, and I will give you my money. You'll give me something of value, and I'll give you my money. There you go. Now you have my money. That is the single best wealth redistribution system going, is capitalism. And just come up with something of value. Solve a problem. I got problems. Solve one of my problems, and I'll give you some of my money. Right? So that's it right there. Capitalism is the single best wealth redistribution mechanism out there. But just to take it from somebody who created value and give it to somebody who did not create value, well, I think you know my opinion about that. If you want a good system, a good healthy system of wealth redistribution, then you should have a good healthy system that encourages entrepreneurship, that takes barriers out of the way of starting a business, that helps and supports small business, not punishes them, right? But helps and supports them. And then you'll get wealth redistribution. Maybe have, free training for how to start your own business, how to do a market survey, how to do an industry analysis. Like, just have it free for everybody to use. Banks should have whole divisions of education for small business. You know, how to do your own books, how to do a sales call, how to prepare a sales proposal. You know, how to identify your target market, how to reach your target market, how to use social media to, that's wealth redistribution right there. I didn't have wealth. I created something that people gave me money for. Now I have wealth. They had the wealth. Now I have the wealth. I redistributed it myself. I didn't have to rely on anything ethical. I delivered value and I got wealth. That is the best wealth redistribution mechanism on the planet, is capitalism. Now, some people will choose not to compete. Some people will say, I'm not going to do it. Well, then we can then ask the question, is your lack of wealth fair? Yes, it is. If you lack wealth, it's fair, because you had all the chance in the world to just come up with something. Come up with something. Anything, come up with something. And I will give you some of my wealth. I don't want to shovel my own snow when I lived in Canada. If you went to my neighborhood and you looked around and you said, I see everybody coming out of their houses shoveling their snow. What if I did that? What if I showed up there at like 4 a.m. and I started shoveling the snow and clearing out 8, 9, 10 driveways? These people would give me some of their money. And then maybe I could just hire somebody to help to start doing it as well. Maybe I could buy some equipment, maybe a snowblower, and maybe I could buy a truck with a plow on the front, and maybe have staff, and maybe have a couple of vehicles out there, about 4 or 5. Maybe I could do that, and they'd give me some of their money. But you got to get off the couch to get that done. Now, that doesn't take any skill. That doesn't take any skill at all. It simply takes the willingness to do it. A lot of people at the bottom simply lack the willingness. It's not society's fault. They lack the willingness. Now, you can say, oh, but I know somebody. Yeah, there's always an exception to the general rule. But the general rule is, if you're at the bottom, usually it's going to be some reason that's related to you. I mean, you could do that. How hard is that to do? Well, there's no snow where I live. Well, there's grass. Successful people don't want to spend the time doing their lawn, do their grass, right? I mean, there's so many ways to get this done. There's so many things that you can do. But, you need a system that allows you to do that. That's capitalism. That is the best way to redistribute wealth. In what world does Tesla earnings cause a 12% rally in the stock? Well, because he promised something. He doesn't have to deliver it. He just has to promise it. And everyone will forget about everything else. Everyone will forget about the sales going down. Everyone will forget about the lower prices. Everyone will forget about the union that will eventually knock on their door. Everyone will forget that he lacks attention to the company. Everyone will forget the rising inventories. Everyone will forget the cyber. Everyone will forget if you just promise something. That is the fan base of Tesla. That is the fan base. That is the power that this guy has to keep his stock price elevated by just promising something. Not even promising, just saying it. Just saying it. Yeah. Constructive comment from big follower your content. Read more about inequality and that way you won't say that having money is success. I would say to you in return, constructive comment, read more about success, and then you won't say what you're saying to me, which is certainly a false statement. Yes, which is certainly, you'll realize that what you're saying is a false statement. What you're trying to say here is that successful people who have money don't have money because they're successful, or that people who have money are in no way successful. Come to my neighborhood in Canada, the neighborhood I used to live in. Come to my neighborhood. You will find the highest concentration of graduate degrees probably of anywhere in the city. You will find successful people in every house, and if you ask them what they do, they'll tell you. And you'll say, well, that's pretty impressive. You won't come across these places, oh, I won the lottery. Oh, I inherited everything I had. Oh, it was just handed to me. Oh, I hit it big on YouTube. You are not going to find that in my neighborhood. Every house, every house, every house, right? Every house. My immediate neighbor is a vet who has his own practice. On the other side of that is my dentist who has his own practice. He's not a dentist for a practice. He owns his own practice and he has dentists working for him. And you can go on and on and on throughout the whole neighborhood. Where you find money, you will find success. More often than not. More often than not. So I don't know that I'm the one that has to read anything. I live in these neighborhoods. I live with these people. Even here, where I am in Costa Rica. I live in a particular community where everybody has a big house. Everybody has a big house. Go knock on their door, ask what they do. In this neighborhood, they're all primarily business owners. All of them primarily business owners. Successful business owners. Not lottery winners. Not lottery winners. Not people who just got money. All successful people. Money is the reward for success. Period. End of story. Many people work twice as hard as you and me, and they simply do not get the chance to accumulate cash. Who said anything about working hard? You can work hard all your life and never be successful. Who said anything about that? Where did you hear me say anything about working really hard? Only people who work really hard get money. I never said anything about that. Never once. I think you're conflating things. So there are people who have to work hard because they have no choice. They have to work hard. I look out my window in the morning, I see that guy in the back of the truck in the winter throwing garbage into the back of the truck, and I think, well, what choices this person got other than to work hard the rest of their life? Right? Does that mean that they should have a lot of money because they have to work hard? They're not successful. They're simply not successful. Just because you're successful doesn't mean you had to work hard. And just because you're not successful doesn't mean that you don't work hard at all. So I didn't say anything about working hard. I said success. Successful people. For instance, they do not have the choice to whether consumers save it. Yeah, they don't have a choice. You are, at any point in your life, the sum total of all the decisions you've ever made. Nobody aspires to a minimum wage job. Nobody. You end up in them. You end up in them because of the choices you've made in life. For the most part. Now you might say, well, some people don't have the ability to do certain things. Give me a break. Give me a break. I mean, talk about having low expectations. I hear that. Well, they don't have the ability. Are you telling me that somebody doesn't have the ability to pick up a hammer and learn carpentry? You telling me somebody can't get that done? You telling me that somebody can't learn how to be a welder. That's not difficult, by the way. It takes training, but you can be a welder. You can be a plumber, a carpenter. You know how much cabinet makers make? What about laying a driveway? You're just laying concrete. The guy who did my driveway does driveways in the summer, and he lives in Florida. He has a house in Florida. He lives there, and he lives in the Niagara region in the summer, and he just pours concrete driveways. That's all he does is concrete drive. You telling me you can't figure out how to pour a concrete driveway? There is a place in capitalism for everyone if you just stand up and do it. If you just show up. If you just show up. So I stick by my statement that if you have money, it's probably, I'd say 90% probability, I would say you're a successful person in life. I didn't say you're a hard worker. I said you're a successful person. Usually hard work comes with success, but it doesn't have to. And if you tell me, I work hard all day long, well, that tells me nothing about your success, because you may have no choice but to work hard because you made poor choices. So no, I stick with my statement that if you did more of an ethnographic study of people who have money, you will find a backstory of success. So I got to disagree with you there. Move to the U.S., sure it'll cost you, but the company might be better than L1 Costa Rica test takers. Oh, I don't know that I would say that. Sunny California. Excuse me on that one. Sunny California is waiting. Yeah, they are. All the tax collectors are waiting. And I get to enjoy a state that is overflowing with homelessness and crime. Oh, God, I can't wait to get to California for that one. Here's more than half of my money, and I get to live in a city where crime is increasing and homelessness is everywhere. Beautiful. Come on, man. Come on. Exploitation of labor by capital built this country. No, it didn't. You don't have to take a job. You don't have to do it. And if you believe that, make a pledge to me right now. If you believe that is true, and of course I assume you never want to be exploited, don't take a job. Create your own job. And if you do take a job, please don't take a job from a rich person. Go work for a poor person. Go work for a poor person or make your own money. But just because I hire somebody doesn't mean I'm exploiting their labor. We're entering into a contract. Somebody comes to me and says, I have these many hours of the week and this skill set I'd like to sell you. And I say, well, that's a skill set I'd like to buy. What price can we agree on? And we agree on a certain price, and then we enter into a contract. Okay, you show up at these times, you give me your skill, and I'll give you this much money per week. How's that sound? And both people agree. I'm not exploiting them. You could say labor is exploiting capital, because I could just hire robots. I could just automate. I could just send my all the jobs to India, South America, China. I could do that. Labor's exploiting my capital. Come on, man. Once we start buying into these narratives, the exploitation of labor, I think you read too much Marx, and I don't think you understand where Marx was absolutely wrong, and how to critique him, and I think we end up repeating things that we read somewhere. Exploitation of labor by capital built this country. No, it didn't. I think you can see that I am a strong market capitalist. It is the single best system in the world, or again, I think somebody told me who said this and I forget, the worst system in the world except for all the others, right? You fail to consider the social contract. We give the government power to tax people as voted in by democracy. The ease of how rich people now easily can move across borders is a modern problem and one of the largest leading to wealth disparity. No. Rich people leaving a country leads to wealth equality. not to wealth disparity. I think you have that backwards. Let's think about it for a second. Let's say that you have a country and you have a bunch of people here with very little and two people up here with a hell of a lot. Well, you got a lot of wealth inequality. These two people leave. Well, everyone's equal now. The more that successful people leave and they take their money, the more equal the distribution of the remaining wealth becomes. So no. I think what you want to advocate is for more people like me to leave the countries we're in, and that would solve the wealth inequality problem, because once I leave, there's less inequality, right? And if we all left, if the top 10% all left, you'd have that utopia of everyone has the same amount of wealth now. Not a lot of it, but everyone has the same amount of wealth now. The problem is, if these two people leave, how is this person ever going to get a mortgage? Because you got to go to a bank. And a bank has a balance sheet where it has deposits and it makes loans. If these people leave and these people have savings equal to zero, there are no deposits, there are no loans. You can't get a car loan, you can't get a mortgage, you can't get a business loan, you can't get anything. The economy works and you have your mortgage and you have your credit card and you have your student loan because there are people who are unequal in terms of the wealth. They have enough wealth that they can give it to the bank and say, go ahead, lend it out. Let's help some other people out. But as soon as they go, you will get wealth equality. And I think we're getting to the conclusion of this wealth equality thing, that when you do arrive at wealth equality, everyone is equally poor. That's the only way you get to wealth equality, is everyone is equally poor. You want that as your economy? Everyone equally poor? Because that's the end game. The moment you try to redistribute wealth to get a Gini coefficient of zero, a Gini coefficient of zero means that everybody has the same amount of wealth. You have an economy in destruction. You have a poor, impoverished nation. That is the only way socialism ends. That is the only way equality ends. The only way it ends, period. Period. Are you adding to your CARUN at this price? I am. Let's see what I did there. I sold 100. I sold 100. I have 28,100 shares now. I also have 46 puts. Where are we here? 46 puts at the May 42. I have 100 puts at the July 45. And I'm looking to sell, where are we here? Another 100 at the July 41. Looking to sell another 100 at the July 41. I don't know if I'll get it, but yeah, this is my high conviction trade for the year, is Capri. Many thanks for sharing your thoughts and knowledge. Recently discovered some of the works of Russell Napier. I'm aware of him. Some very interesting, convincing views in global monetary system and changes it seems to be undergoing. I know of him. In another video, he made a point on the deflationary role of technology. I agree with that 100%. For the past 100 years, technological development has been tremendous, yet inflation for the same period has also been substantial. What would you respond to this argument? Well, has it been substantial? Has inflation truly been substantial? We keep thinking about things in terms of, 50 years ago, a loaf of bread was 25 cents. Today, a loaf of bread is $3. Obviously, that's inflation. 50 years ago, minimum wage was $1.50. Now, at least in Canada, this fall, it's going to be $17.20. So, you're looking at roughly about 6 loaves of bread an hour under both situations. So, where's the inflation, right? If you think about what 1 hour of labor buys, you'll find over the last 100 years that there has only been, in most cases, deflation, not inflation, deflation. The only time we think about inflation is when we think about the dollar bill. but we don't get we are not endowed with dollar bills. We are endowed with time, and we want to buy stuff. Well, let me put stuff here. We want to buy stuff. We need dollar bills to do it. So we get dollar bills for our time, and then we take those dollar bills and we go buy stuff. In essence, by the transit of property, our time is buying stuff. If you figure out what you were paid 50 years ago or 100 years ago in terms of minimum wage and how much things were, and you look at how much you're being paid now and how much things are, you'll find that for most things, we've been living in deflation. Deflation, not inflation. Now, I probably should have corrected this a little bit here. 50 years ago, 25 cents bought a loaf of like white Wonder Bread. Today we have many, many more choices for the type of bread we buy. When I say $3, it's because I'm buying a particular type of bread. But if I stuck with white Wonder Bread, what is it in Canada? Like $2 a loaf for white Wonder Bread for the same. It's 1 pound of a loaf is 1 pound, right? So $2. So what were you getting here? 6 loaves of bread an hour of white Wonder Bread, and at $2 you're getting what? 8 loaves of bread of white Wonder Bread. White Wonder Bread has actually shown deflation. Once we measure things in dollars, it looks like there's been nothing but inflation. But dollars are what we trade hours of our lives for so that we can go buy stuff. So let's just get rid of the dollars and say, well, I got hours of my life and I want stuff. What does 8 hours of work buy me today? What did 8 hours of work buy me 100 years ago? You'll find you can buy more stuff for 8 hours of work today. You can buy more stuff because you're paid more per hour. Now, I just used minimum wage. I didn't even use the average wage, which is higher than minimum wage. I didn't even do that. I just used the lowest wage, which does not, the criticism is, it does not keep up with inflation. And if you use minimum wage, you'll find out that no, the wage does keep up over the long term with inflation. So what does the average wage buy? It's even better. So no, past 100 years, technological development has been incredible and prices have gone straight down. And for the same period, an hour of labor has bought more, right? It has bought more. The other thing that you can't control for is the process of making a pound of white Wonder Bread back then versus a pound of white Wonder Bread today, in terms of the value that the bread represents. Or let's try another thing. Let's think about how long you have to work to buy a car. In 1970, an average car would have cost you about $4,000, brand new. An average car would have cost you about $4,000. At minimum wage, at $1.25, you were making about $2,500 a year to buy a $4,000 car. Now, an average car might cost you about $35,000. So you say, well, 4,000 to 35 is something else. But at a minimum wage of, let's say, $15 an hour, that's $30,000 a year. $2,500 a year, average car 45. $30,000 a year, average car 35. Now, the technology in this average car today far exceeds the technology in this car at this time, that if you took all of this technology and said, well, how much would this technology have been back then? You probably would have paid $500,000 for it, because the technology didn't exist. You'd have to create it. And even if it did exist, it would have been so prohibitively expensive to do. That's what technology does, right? It drives the price of things down over time. The $35,000 car has got far more technology than the $4,000 car did, and based on what a year's wages at minimum wage can get, it is more affordable than it was 50 years ago for a product that is way, 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 way better. We live in a deflationary world. If we stop paying attention to money and start looking at what labor buys, what an hour of labor buys, you'll find that you are living in a deflationary world. And that wraps it up.